Welcome to Momentum Monday. Today is May 21st, 2023. Howard, are you enjoying the bull market in tech?
I am. As people know, I have not probably about 40%, 30 to 40% long. So I'm all tech, but it's pretty underweight still, as I've been for the last year. Because I'm my age mainly. I'm in price action, as we've been talking about. Well, not perfect, because so many people are just on the wrong side of this and just not at all invested and missing this tech run. I think for me, luckily, it's Apple and Google, which are my big positions, and Google is benefiting. I think as people realize that it's an app-driven world and AI is not a just say it like I think I talked about last week.
A
AI.
fact. Yeah.
Well, no, AI is a feature set and a tool set, and it's just the internet. And who are the biggest internet companies? It's Amazon, Apple, Microsoft, Google, even Facebook. And was Facebook's tripled off the bottom? I sold it too early. Um, uh, and Google's was lagging, but catching up. And I think where Google's catching up is um, sometimes the second mouse gets the cheese. And OpenAI is only 5, 6 months old. Google's now come out with Bard, and it works inside all the apps. And I think what the data is showing that even though Microsoft came out with OpenAI, it's only really increased their browser search by a very fractional amount. So this goes to Bloomberg, this goes to Google. When you have people's workflows, and it's very hard to break people's workflow. And so Google, I call it the Empire Strikes Back. If we look at Google, it's just going up every day because it was just sold for so long. And people now realize the institutions especially may realize they made a huge mistake. So I think it's just running over the shorts. And so tech is strong, right? NVIDIA,
Yeah.
forgetting the valuations. I mean, I'm not long NVIDIA because I don't understand how tech works, but obviously they are the leader. I mean, look at that recovery, and it's not letting anybody in. That's a sign of a bull market. I know
Yeah.
people don't want to believe it's a bull market, but a sign of a bull market is the V bottom, when it just does not give people a chance to get back in. It's not happening everywhere. It's happening in big cap tech.
Yeah. Tech in general, mostly mega cap and large cap. NVIDIA is almost 10% away from its all-time highs, which is incredible. Just looking at the monthly chart.
No, I think it's right at its all-time highs.
10% away. So I mean, it used
No,
to be a $3 stock.
hang on, Ivan. Oh, you're right. It's 10% away.
10% away, Howard, and Apple is only 4% away. So those two are the closest to just recapturing their all-time highs, and they'll probably will at some point this year. I mean, the big story this year is just the outperformance of mega caps like the Apple, Microsoft, Nvidia, Meta, Google, Amazon. They're all up 30% plus or much more year to date. But last week, we finally saw some other companies joining the rally. The semiconductor ETF SMH made new 52-week highs. It closed really strong.
Yeah, there was like companies like Marvell that people have forgotten about. MRVL, they're starting to perk up. So
some
it's like,
interesting, breakouts like Lam Research and On and MU, like quite a few breakouts in the sector. Like those stocks tend to move this together. And not only semiconductors, also we saw quite a few strong breakouts and follow-throughs in software. So IGV also very strong week, as you can see how strong it closed. So stocks like ServiceNow, big breakouts, Splunk, Elastic. I don't know if these are just bear market bounces, but even net that.
no, if you look at You know, Snowflake and Confluent are two that my friends that are my MIT friends, and they're starting to get some bounce too. So they're not. Listen, the problem is for people they're not cheap, and the problem is there's still going to be a lot of sellers above these. But large cap, the people I can't explain why, and it's just not my job to explain why, but the price action is such, and we've been watching the price action for months, and we're telling people not to be short. The price action now is in the favor of the bulls, right? Obviously, you got to keep an eye on the financials, XLF, but they haven't broken below 30. It's perilous, and we need credit. So, we'll get to the macro side later, but the price action is such that it's silly to stand in front of it as a small investor, right? It's very uncomfortable to be long when the headlines are so terrible. And like we've been saying for months, the headlines are going to be terrible for a while. So let's get to why the headlines are going to be terrible, Ivan, because it's driven on the banks. You're going to have Fed ceiling, up until June 1 in the next few weeks. It's just going to be massive fear about the debt ceiling, right? And markets like to climb a wall of worry, but like you are going to start hearing some horror stories about. And I put it in my blog post today about what it would mean if we walked away from the debt, and you know it's just that's how the media is going to sell clicks here. The
Look,
other problem that
go
we
ahead.
have,
Yeah.
so we're awash in debt. The other problem is we gave these kids a break on their college. And what have they done? They've gone and spent that break and jammed up their credit cards to record highs. So credit is at an all-time high. So all we did was allow people to just jam more. They didn't save. They gambled it, like we call it the degenerate economy. They spent it, and now they're putting it on credit. They found a way, this debit card society found a way, this Venmo society found a way to jam up their credits. So even though we gave them a break to pay their college bills, that is a terrible data point, right? Because interest rates are rising and debt is at all-time
But
highs
do you
right
know
now.
which age group increased their credit
No, I
cards?
don't actually, but
So you're just
I
speculating.
assume
Okay.
I'm speculating, and it's not either way. It's just not good, right? But this goes to my thesis around staying away from the middle. You have to focus on businesses that cater, and that's where the you're flipping through
All
the.
right, here's the middle, Macy's, and then you
I,
have
I
like the
think of I
cheaper
think of the middle as retail. I just think of the middle as retail. I forget what XRE.
XRT is the retail.
XRT. So if you look at that's the middle. Home Depot's sales were down 4%. Um, you know, people are people are
Target.
spending their money
Yeah.
at Walmart because it's food, groceries is, they're spending money at Walmart, but not at Target. So the middle is a mess. And I look at Home Depot and Target as that, right? But at the ends of the curve, you have DraftKings, you have there's many ways to speculate on the degenerate part of the society. And but then at the expensive part of the society, and that includes Apple, that includes LVMH, that includes certain lifestyle brands that Dick's Sporting, not Dick's, but that Deckers has with their Hoka shoes. Um, so so you have to be very careful around retail and the brands, but I really feel like this credit problem and rising interest rates still have yet to play their hands. It's not going to make you give up your Apple. The last thing you're going to give up is your Apple. The stores are still packed. Last thing you're going to give up is your laptop and your access to internet. And it seems like Ivan with Netflix, they figured out a way. People don't mind paying for ads. I mean, Netflix's price action means that given a choice, this is probably why Facebook is still working. People in America are happy to pay for ads, you know. Um, and their ad model is working. So there's a lot of stuff that's just working despite the negativity. What else are you seeing? Oh, and then
Well,
the casinos,
it's
obviously, as part of the degenerate, you flip through them. The casinos
yeah.
are working.
I mean, What's not working is most of the Chinese names definitely not working, and despite of their bidding estimates, they're
I
just
don't understand. When you have stuff that's working in
at
the
the
States,
loss.
why are you going to speculate on
Exactly. There's
that can pull
zero
the rug?
reason.
There's
What I
zero
was
reason.
gonna mention is that it's pretty incredible that we're seeing this strong rally in tech, considering that interest rates have been rising pretty quickly the past few weeks, and the US dollar has been rising the past couple
Yeah,
weeks.
yeah,
Because during the same circumstances last year, tech was completely demolished. And now
yeah.
we're seeing them rallying with interest rates, which is so completely different narrative, completely different correlations. So it's a completely different market that is kind of hard to explain, but it's just, I
Very
guess,
hard to explain. I'm
AI.
explaining the way I'm handling, and we're all different ages and different. I'm just 40% long, and luckily it's staying with big cap tech so far.
Yeah,
I, you know, it may not work. Again, the data is so confusing, right? It is so expensive. Never been more expensive for someone to own a home. But at the same time, Ivan, New York Times wrote about this today. There was the largest generational transfer of wealth. So if that money gets passed down, kids can afford homes. I don't know. And then on the inflation side, it continues to drop. Now that could be because debt's going up and there'll be less spending. So there's just always, to invest just based on data, macro data, I feel will confuse you more than investing based on price action. And the price action is what keeps you in the market here, and the price action what will take you out of the market. And I think semiconductors and tech price action are definitely a reason to be long, and
yeah,
especially a tough market to short. Now, I guess the people short have done fine if they were short the regional banks and they're short financials,
yeah.
and they may end up being right, and tech will roll over at some point. So you know, that's
Yeah,
what makes,
it's a bifurcated market, but
yeah,
on your point about inflation, just like the internet was a huge deflationary force, probably the market, since it's forward looking, expects AI to be a huge deflationary force. And it kind of makes sense because we might see a pressure on a lot of the service related jobs. They'll probably get cheaper as people who use AI tools will be just much more productive, and one person will be able to do the job of 20. The market is not stupid. It's just looking maybe more than 6 to 9 months ahead, maybe a few years ahead, and thinking AI is going to help all those companies to improve their margins. And there is a reason all those mega caps are rallying. They're just in the best position strategically to take advantage
yeah. See,
of
I think,
AI.
but it'll make the smarter people smarter than this goes to the rich man, degenerate man economy. AI is going to make the smarter people smarter and the dumber people dumber because you're gonna get what you ask for times 10. And Twitter in a smart person's hands is a great tool. Twitter in a dumb person's hand is a self-fulfilling. It's where politics has gone. So it's a very dangerous time, and it's kind of a perfect storm for this bifurcated, market. Um, and I was going to say one more thing here, Ivan, was that I was looking for, yeah, I was looking at credit card balances. It's bananas. We've covered the home prices. I was going to bring up one other thing I forget. Oh, PayPal, Apple. Look at what Apple's doing to banking, right? Like I know you're not seeing it in the banks yet, but you're seeing it in PayPal. You're seeing it in Square, right? You're seeing it in the neobanks. They're going to be, doing down rounds. Um, these were considered tech companies, and now they're being shown for what they are, is just something that Apple can eat. These became big enough companies that uh, their market cap transferring to Apple is basically what you're starting to see. I think you're going to start to see Apple, or at least the analysts, start to just, conf, you know, build in that fintech is now part of Apple's market cap, right? And there's a lot of market cap to Apple to take in consumer finance, right? And so they've already, I don't know, where's PayPal today in valuation? Let's see. They have wiped out, so there's what,
68 billion. Yeah.
so 200 billion in market cap. So it's not all winners, you know. I
So
think
it's down 80%. Yeah, 80%
yeah,
from the
so
price.
200 billion there, 100 billion in Square, it starts adding up. You know, 50 bill there, here and there. And you know, Apple deserves to be the largest company in the world right now because you know they've nailed retail, they've nailed chips, they've nailed active users, and it's really interesting out there. It is real, and these five companies at the top, they're not dumb. This is not like any other Nifty 50 in the world. These are very high margin companies. So as much as we should be scared of the Nifty 50 formula where eventually everybody's in the wrong stocks, these companies can surprise us a lot longer because of their margins.
Yeah, the valuation are not even that high if you just look at their PE ratios, but
yeah. So what
so
else are you seeing that's swingable, Ivan? So I'm
so
just sticking to the Q market, but
so these are the main things. I mean, I'm trading mostly the mega caps, the occasional semiconductors like MU and LRCX, just those breakouts. And I mean, software has been strong for whatever reason. It didn't pop on my radar. I didn't trade software, but I've been sticking mostly to like the mega caps, using co-options like Amazon and AMD and Nvidia. These are my plays currently, just whatever's really working well. And these are super liquid, so it's really easy to build any position size you want. So, which is very important for an active trader. So this is where I've been spending my time.
yeah, I'm trying to think of what else. We've covered retail, we've covered inflation, covered home price. Yeah, that's it. That's, I'm in New York, you're in Milan.
Yeah.
I think that's all I got, Ivan.
All right. See you next week then.
See you, everybody.
All right. Bye.